You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. No rest for the wicked, going right from the option block right into TWIFO. This Week in Futures Options, the program where the name pretty much says it all. My name, of course, Mark Longo from theoptionsinsider.com. Reminding you, if you want to check out all of the goodness hitting the pro side, including awesome pro Q&As, if you like TWIFO, you really need to check out the pro Q&A we did this week with none other than Dan the Man Gramza. I've lost count of the asset classes we squeezed into that pro Q&A session. Metals, crypto, ags, equities, the vol products in and of themselves, rates, you name it. It was on there. It was wild how much living we squeezed into 1 hour, listeners. If you like TWIFO, you owe it to yourselves to check it out. Only one place to get that, as well as options oddities, as well as everything else we do. Theoptionsinsider.com/pro is the place to go to learn more. As we learn who's joining us in the old CME Group hot seat today, the man we just learned is 100% French. None other than Monsieur Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to the show, Monsieur.
Always happy to be here, but actually I'm probably about maybe 5% French, just the name part of it. The rest of me is not French.
But you missed the last show. We clearly established you are 100% French and nothing else. So that's what we're going with for the rest of the show, listeners, as we keep on rolling into the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, listeners, let's get down to business with a little bit of moving and shaking, where we break down everything that's lighting it up to the light side and to the dark side this week over there at CME Group. If you check out this chart that we tweet out right before showtime, you will see that we are biased to the green, but it's not quite as biased as it has been in recent weeks. Last week, we had a hard time. We could probably put together a bottom 10, but that's about it. This week, we can easily do a bottom 20. But it is biased, I would say, roughly 70-30 green over red out there this week. But that said, Mr. Uncle Mike, if you can put aside the frog's legs and the escargot for a minute, sir, you think you can handle a little bit of moving and shaking for the folks?
I can move and I can shake with the best of them. We're starting out dark this week, my gosh.
I like it. That's the Frenchman in you coming out.
Oh, Viva la France. I think I'm saying it right. I don't know. But anyway, looking at the dark side, coming in at number 5, we have WTI. Slipping to a 2.7%. It was actually number 5 to the light side last week at being positive 5.63%. So we definitely have some movement there. And WTI, you like how it's slipping on that one? I thought that was pretty clever.
Very impressive.
I should be a host someday. Maybe I can do that role. With that, we have rough rice coming in at number 4, down 3.01% on the week. We have Kansas City wheat coming in at number 3, down 3.9% on the wheat. On the week, say wheat and week quickly. That's kind of a little bit crazy. Then we have more wheat coming in at number 2. The SRW wheat coming in at number 2, down 3.96% on the week. And good gosh, it stinks in here because natural gas, by gosh, somebody farted. It is down 9.71% on the week. And it was also number 1 to the dark side last week, being down 6.89%. So a lot of interesting things happening on the dark side. Now, let's get a little bit of enlightenment with where we are here. Let's get more positive with things. Let's start off all the way at number 8 with the S&P Midcap 400, up 3.5% on the week. Big week. The S&P E-mini 500, the thing that all of us traders look at right before we go to bed when we're not supposed to be we're trying to turn our brains off for the day, but we all wonder. I wonder what the S&P E-mini is doing. Well, last week it was up 3.54%, or this past week it's up 3.54%. The E-mini Russell, the index that likes to just kind of do its own thing, up 3.77% on the week. We have the consumer discretionary sector. That is up 4.17% on the week. Next, coming in at number 3, we have the E-mini NASDAQ 100, up 4.81% on the week. But one interesting note to have with this, it was number 7 to the dark side last week, being down 0.89%. Number 2, we have the technology sector, up 5.89% on the week. No surprise there. And then number 1, you just wanted to bring me on the show just to say this, I'm convinced, Mark. You just did it. You're breaking my heart every time I have to say something positive about something that's so crazy. The entity, the institution, possibly even you can call it a currency, maybe. Bitcoin is up 9.86% on the week, not helping the value of my domain name. And that is the dark side and the light side for the week. Back to you, Mark.
There you go, listeners. You want to get hot access to his domain name. He's got a 50% off sale. BitcoinReallySucks.com. Hit him up. Uncle Mike at stcharleswealth.com. You too can get in on this lightning deal as we go out, listeners, to see what's moving and shaking on the vol front this week. Is it a hot week? Is it a biased week? It's a bit of a weird one this week, really, listeners, because we're kind of all over the place on the vol front this week, listeners. In previous weeks, we've been biased mostly to the upside or to the downside. This week, we're, again, kind of all over the place. We'll kick it off in the ags. By the way, you can run this report for yourselves. Just type CME and CVOL into whatever browser you're rocking. That'll get you to the dashboard for CVOL. You want to set the high-low range to 1 week, and then you want the aggregates tab. We can look at all the individual complexes at another time. We're focusing on the aggregates right now. Then I like a nice grouped list, but to each their own out there. Going to kick it off in the ag products this week. 1919 is their CVOL, off about 0.12 today. And again, kind of hanging out in the middle of their range. The low is 1881, the high 1949, so no clear direction for ag vol this week. Treasury price vol. We were talking about this last week, just kind of epic moves in vol last week, including in the treasuries. We don't see that too often. Just a tick shy of an 8 right now, 7.98, which in and of itself, if you know anything about treasury price vol, it's usually hanging out at a 6 or below. So at an 8 already, it's lofty, coming down about almost a quarter of a point just today. So that's a big move in treasury price vol. And on the week, it's had a heck of a range, 770 to the downside, 8.84 to the upside. So hanging out near the lower end of its range. But again, a big range for treasury price vol this week. And again, not surprising. We have a trade war going on. We have a battle between the White House and the Fed talking about rate cuts now. So going to be some action in the treasuries as a result. Below that, we have the energy aggregate C-vol, 59.22 today, off a little over a third of a point today. On the week, it's had a pretty wild range as well, 57.87 to the downside, 60.51 to the upside. So hanging out towards the middle of that range as well. Below it, we go to the land of FX, which again, usually pretty sleepy, hanging out right now at 11 1/3. That may sound like a lot, but it's off over a half a point just today, off 0.53 just today. So FX vol, at least for today, coming crashing back to earth. But that's not the low for the week. It hit a 10.8 earlier this week, the high 13.03. So almost 2.25 point range on the week for FX vol. We don't see that very often, listeners. Again, wild times in these markets. Be careful what you're up to out there. Below that, we have the aggregate commodities C-vol, 40.1, off 1.25 points. Just today, the range on the week, 38.82 to the downside, 41.35 to the upside. And then below that, we have the aggregate metals C-vol, where Uncle Mike likes to hang out, 25.52 today, off nearly 3 points. Just today, 2.9 points coming off the top just today. And you know what? That's not even the low for the week either. The low was 24.58, the high 28.42. Nearly a 4-point range on the week here, listeners, for aggregate metals vol. Again, we don't see that too often, but just look at gold this week. Rallying, fell out of bed yesterday, was still up for the week. That shows how much it rallied earlier this week. Just wild times, reflecting that in the vol on the metals front. And at the bottom of our list this week, it's the Treasury yield vol, always the biggest number on our list, 142.55 today, off 4 2/3 points just today. On the range for the week, the low of 138.95 and a high of 157.62. So not quite 20 points there, listeners, for the Treasury yield vol. Again, a wild week. Nothing is pinning the needle really in any direction. They're all kind of vacillating near the middle. So interesting stuff out there this week. You can check these out for yourselves. Just type CME and CVol into your browser. Meanwhile, though, it's time for Uncle Mike and I to begin our journey. We know Uncle Mike's on the show with us. We're probably going to talk some silver, probably going to talk some 10-year, and maybe some equities. So I thought we'd mix it up to start it off. And ironically, this is a name that used to dominate our show. But lately, with everything else going on, it's kind of fallen by the wayside. But it is number one to the dark side today. So we're going to kick things off with our old buddy, Nat Gas. It's time for some energy.
It's time to tap into the deep options well of black gold, Texas tea, Nat Gas, and more. It's time to talk energy.
All right, listeners, you know where to go to play along with the home game, cmegroup.com/TWIFO, TWIFO. Once you're there, go into that drop down. You're going to see energy is 3 slots on the top in asset class. Then product family going to go down another 3 slots to Nat Gas. And once you're there, you'll see that Nat Gas, at least for right now, as of the show, trading 290 in that front future, off about a third of a point or nearly 11% just since Monday. Obviously, if you go back to the end of our show last week, it's off nearly 10%, about 9.7%. Is it a spicy week on the volume front? Yeah, it's looking pretty hot. 864,000 contracts on the tape. So we've obviously seen Nat Gas be more active, but we've also seen it be a lot quieter. So definitely not quite explosive, but pretty combustible week out there in Nat Gas. Mr. Uncle Mike, we'll get to all your favorites in a second, but anything catching your eye in the combustible world of Nat Gas these days?
Just besides the fact that it's kind of going up in flames lately. Boom. Yeah, it's definitely, there's been a sell-off. It looks like it's peaks kind of in the early March time. And this one, it's something to where with natural gas going down like it has, it's this happened before all the stocks went down. So I don't know if you can fully blame this on tariffs. One of the few things that may or may not have something to do with tariffs.
Nat Gas is a day that ends in Y, so it's going to move. It's just a wild product. It also puts the lie, Mr. Uncle Mike, to what your good buddy the Viceroy always said, that you can't trade options on underlyings below $10, let alone $5. Nat Gas proves everyone wrong on that, right? It's been sub $3 forever, and it puts up 1 million contracts a week. So folks can't get enough of options on a sub $3 underlying, Mr. Uncle Mike. But let's see what they can't get enough of this week out here in Nat Gas. And what also caught my attention is it's trading kind of like an equity this week, by which I mean to say the big print is in effectively not quite a 0-day contract because it's not going out today, but it's only got 1 day to go. So we'll get there in a second. Like I said, 864,000 contracts on the tape. Of that, the largest percentage, exactly a third, going up in the June contract that has 33 days to go. The future out there a little bit higher, 3.07 listeners, off about 30 cents this week. What is the vol in June Nat Gas? Might be asking. 63.44, up nearly $2 this week. About 1.9 points this week. Skew-wise, we're seeing the skew kind of weirdly symmetrical, weirdly flat. There was modest bids to both the puts and the calls last week, a little over a point in either direction. This week, that has shifted to a little bit of a bid to the puts. 2.2% bid are the puts. The calls, 1.5% discounted. But when you're starting at a baseline vol nearly 65, 1 or 2 points in either direction really is not that significant. That's a pretty flat skew for Nat Gas, all things considered, which really kind of means, at least for the next month, the options market isn't pricing in any wild or crazy moves in either direction right now. Maybe they're thinking we're hanging out at a little bit of equilibrium, or maybe they just can't make up their minds. But you know what the big print was out here this week? It wasn't in the June contract. It was all the way here in the May contract. That's going away in 1 day, listeners. Yes, the May 3 puts. I said we're at a 290 in that front future. So the May 3 puts, about a dime in the money puts, have 1 day to go, listeners, trading nearly 40,000 times this week. So folks slinging. The 3 puts, looks like the big block was on Monday, nearly 20,000 going up, mostly closing, it seems like. 7,200 on Wednesday, 6,800 on Tuesday, 5,600 today. Seems like closing all week long. Even with that, there's still 33, almost 34,000 open on this strike. So there is size OI left on this strike. If you're wondering, what's a 3 put going for with a day to go in Nat Gas? Looks like they traded for an average price of around 11 cents today, which again makes sense. Dime in the money, extra penny on top. There you go, 11 cents. And if you wanted to get some upside, you wanted to get some 3 call action with a day to go, they traded about 2.3 cents on average of their listeners. So there you go. Some folks were slinging those, nearly 3,000 trading just today on the 3 calls. So you got some action out here, listeners. But the big dog, I think the more salient contract going up out here, and a close number 2 were the 2 half puts going away in May, trading 37,000 times out here this week, listeners. So pretty active, including most of that actually going up today, nearly 20,000, 19,700 going up of these May 2 half puts. Again, OI of about 40,000 on this strike. So it's anyone's guess whether they were opening or closing. Now, this is kind of interesting. They went up, I'm looking today, including blocks of about 1,500 for prices on average, close to a nickel. So a nickel, listeners, for the, I'm sorry, these are not May, these are June. These are the June 2 half puts. June 2 half puts for a nickel. Are you a buyer? It's a fairly cheap flyer. 2 half, that's a bit of a ways to go. But then again, we've got some time. You got about 33 days for that to happen. I don't know. Uncle Mike, I know you're not a huge Nat Gas guy, but if I had to do the proverbial gun to your head, 2 half puts in Nat Gas going away in a month for a nickel, would you be buying or selling those bad boys?
I'd probably be a buyer because natural gas. If I'd much rather be up at night wondering if I'm gonna get the move as opposed to am I gonna lose my house?
Yeah, it's kind of hard to sell that for a nickel in Nat Gas. Play the lottery ticket, and maybe you win, right? But at least you don't really lose a lot of sleep at the very least out there. So interesting stuff out here in Nat Gas this week, listeners. 2 half puts for about a nickel. Somebody seems to be liking them, and they're opening for size. So worth noting, 2 quarter puts also trading about 10,000 times today. So it could be some 1x2 action going up on. But do you really need to do a 1x2 when the 2 half puts themselves are a nickel? If you wanted to buy those, you could buy them for a nickel. If you want to sell them, do you really want to sell them for a nickel? Interesting. 30 days, 2 quarter strike. Can we threaten that? I mean, obviously Nat Gas can move, but that is an interesting level. But I know Uncle Mike is champing at the bit to get to his core products out there. And luckily enough, it's been a wild time in a lot of them. Looks like gold not quite making our top and bottom 5 list this week, our movers and shakers this week, but coming decently close to doing just that. Mr. Uncle Mike, you want to start in the metals, you want to start in equities, or you want to start in the 10-year? I'll let you choose.
Well, let's go with the metals then.
All right, to the world of the metals we go.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, let's do it, listeners. To the shiny stuff we go. Pop out of energy. You're going to go down pretty much to the bottom of that asset class list to metals. And then in product family, we're going precious. Uncle Mike, you want to start in your beloved silver? You want to start in gold? What's catching your eye, sir?
Let's start with gold today.
All right, to the world of gold we go, listeners. So you're going to go again all the way down to that list and then to the top of the product category. The big dog in the metals complex and looking pretty robust this week. 500,000 contracts on the tape right now in gold options. That's a robust week. We usually see about half of that, about 250,000 contracts. So doing roughly 2x its normal volume. Gold hanging out right now, 33.5 as we're coming into the start of this segment. Still up this week, even after the massive, that shocks some people. We were talking about this yesterday on the futures rundown. Everyone assumed that gold would be dominating our dark side movers for the week in the futures side. And it wasn't, because they had one bad day, but the rest of the week it was up. So it's still up on the week, listeners, which again shows you what a wild rally gold has been going through. It seems like just yesterday, Uncle Mike, we were talking about, can gold possibly break 3,000? And then here we are earlier this week, 3,500, new all-time highs, Uncle Mike. What's catching your eye in the king of the shiny stuff?
Well, I mean, in looking at it, it had a little bit of a sell-off this week. So we gap up early in the week, and then it has the sell-off actually yesterday. And so it's recovering a little bit. So it is still technically up on the week, just where it is. And so one bad day can really mess with you. And in looking at it just over the course of the last few weeks, I mean, things to keep in perspective, it's pretty much, it's up roughly 50% over the course of the last year or so. And it's just had such a move that I would kind of relate gold to stocks, but to a little bit more of an extreme extent. One thing that I've just said about stocks is that, yes, the S&P is down. I believe it's 7-8%, something like that on the year. But when you have giant moves to the upside, you're going to have pullbacks like that. Not necessarily as big as the big moves were, but relatively speaking, when you have big moves like that in gold, like we have, of almost being up roughly 50% over the course of the last year, a 3% pullback's really not that big a deal when you put things into perspective. And so the fear of inflation, gold is actually doing its job now that people always say it does. When bad stuff happens, rush to gold is a flight to safety. In past markets, to where in the last 6 or 7 years when the world was going to end, gold didn't necessarily act that way, but it's acting that way again. So that's probably my main thought on gold right now.
Let's see what you folks are up to out here in gold land this week. Like we said, 500,000 contracts, so pretty active. Again, you're hitting new all-time highs almost every day, then falling out of bed the next day. You're going to have some paper as a result. The lion's share of that 500,000 contracts, about 40%, going up in the June contract that has about 33 days to go out there. What is June vol in gold? Might be asking. Nearly a 22, about a 21.95, up about 3/4 of a point this week. In terms of skew, now, gold traditionally has been bid to the upside and the puts are offered. As we saw this epic rally just take next leg up after next leg up, we started to see that gold bid kind of fade, which makes sense. I mean, you're blowing through strike after strike to the upside. Usually that skew kind of collapses. And also, I mean, at a certain point, the bulls have to run out of steam. It seems like, at least for now, that level was 3,500. But good news for the gold bugs listeners. In fact, our guest on Futures Rundown yesterday was talking about maybe scooping some gold because he thought it was near term, at least very near term, oversold. But looking at the skew right now, it seems like that bid is back, if ever so modestly. 5.7% bid are the calls out there in June. The put's about 4% discounted. So it's getting back to shades of the old gold skew. Now, does that mean gold is poised for an immediate rebound to 3,500? You can't read that directly into it, but there is a modest bid to the upside again. So maybe some gold bugs are starting to crawl back out of the woodwork. If we go a little bit farther out in time, let's say all the way to, let's go to January of next year, January of 2026. Those calls are about 10% bid, and the puts are about 3% discounted. So the bid does increase the farther out you go in time, which is more along the lines of what we've come to expect from our old pal gold. Now, looking at what the hot contract is out there this week, it's the 3,500s, which again, makes sense. That was the seminal level that gold hit and blew through and then immediately fell right back down from. So it makes some sense that that level would kind of be the line in the sand that everyone's playing around this week. Almost 11,000 of those trading this week, 10,500 of those bad boys, including the big day was Tuesday, 36, almost 3,700, 3,000 on Wednesday, 2,100 on Monday, and about 1,600 actually today. OI left on that strike is 6,100 because people seem like they were bailing on that strike all week long, which makes sense. If you had those in your back pocket and you did get through that strike as we did earlier this week, it makes some sense to get the heck out of Dodge. And it seems like that's what folks were up to. If you're wondering what are those June 3,500s trading for, it's like today they're trading for an average price of $41. So read into that. Obviously, we've retreated from that strike a little bit. They were much loftier earlier this week. Also, we have a lot of action on looks like the SEP 3,500 spreading against the June and against other months, August as well. Look like a lot of 3,500 spreads are going up for, looks like a $57 credit here. It looks like it's just the SEP to the August. That's interesting. As well as we have again, SEP 3,500 strike is just dominating all the paper out there on Globex today. It looks like a 3,500, 3,600 diagonal going up as well today for about a $6 credit. So a lot of things queuing off of the 3,500 strike. Mr. Uncle Mike, same question I asked you earlier, but a little bit meatier option this time. June 3,500s in gold for average price of about $41 right now. Would you be nibbling on those? You think it's going to be a challenge to get back to 35, or what are you feeling out there?
I would think about that, quite honestly. I mean, there's a lot of trading to be done between now and June and a lot of uncertainty. I might take a nibble at that.
Interesting. Uncle Mike, a nibbler to the upside. But you know what he's not nibbling on, listeners? What he's devouring with both hands? Not just frog legs, the diehard Frenchman that he is, but also silver. He loves himself some silver. So pop out of that drop down, listeners. Go out of gold, go down one product in the product listing to silver. 33.82 today, up about $1 and change, about $1 and a nickel on the week, or about 3.2%, which again is a good week, but on a wild week like this week, not enough to break into the top 5 out there. Let's see if I could find it here. It looks like it would be probably closer to the number 10 on our list, up about 2.8% from the end of our show last week. So a good little week for silver, which it needed. It was kind of coming under some fire out there of late. decently active week as well, about 44,000 contracts on the tape. So a little more than, your 25,000, not exactly 50K, but we're closing in on that this week. And looks like about 42% of that is going up in the June contract. Once again, 33 days to go. So that's where we'll be hanging out. But before we get there, I know you want to hear Uncle Mike talk at length about his beloved silver. Mr. Uncle Mike, sir, it's been a bit of a rough go for silver. Silver not really getting carried along with gold, which I think has surprised some people. Obviously a good week this week, but not that great going back about a month or two. What's been catching your eye out there in silver? And were you also surprised that silver not really a flight to quality asset right now?
Yeah, I think with silver, people kind of view that as a, in this instance, because if you look when silver fell out of the bed, it was April 2nd. Silver was terrific, as I think the flow master, to steal a term from the flow master, Henry Schwartz. But 2 days, it dropped 10%. And it's interesting because if you look at the movement of silver on the year, it had made all those gains since early January. Silver is having a great year, gave back almost all of its gains in 2 days, and then it's just been gradually clawing its way back. So the thing that we're learning from this is that the market does view silver as something that is tariff sensitive with where it's going on it. I could see silver catching a little bit of a rally if two things happen. If number one, we actually do totally back off on tariffs, or we get some type of a deal done or whatever. And when I say deal, it may or may not be for the greater good, but it'll be one of the deals to where on Fox News, they'll be saying how Trump is the greatest thing since sliced bread. And on CNN, oh, Trump got screwed over in his deal. He is a horrible deal. One of those deals, if you will. And I think that could definitely give silver some buying action. And then also, I think if we can just kind of break out of the areas with which we have been coming to from a technical standpoint, we're very close to them again. And silver is one of those things to where at some point it's going to blow up like a thief in the night. We're not going to know when, we're not necessarily going to know why, but I do think that if we can get a little bit more above these levels, if we get a little bit more movement, maybe a 5 to 7% more movement to the upside, then that could be the breakout with which we need. So interesting to watch for sure. And we'll see how the tariffs affect it, or the talk of the tariffs, or the talk of getting rid of the tariffs, or just saying anything with the word tariff in it actually will affect silver.
Uncle Mike, we got a question coming in from our live chat. You kind of just mentioned your outlook on it a little bit, but they want to know, as Nichols here wants to know, would Uncle Mike buy more silver here, or would he be waiting it out? So I'm assuming he might have some like you already. You think he should be nibbling at a little bit more, or are you still a little bit concerned by these markets?
I mean, we already have what we want to have with our client portfolios, so I wouldn't buy any more from that instance. But if I was flat right now, the way with which I would be looking at this is that I'd want to see a little bit more movement to the upside. I would consider starting to nibble a little bit with some very small positions and then buying on the way up, if that makes any sense. This would be one to where I would have buy stops in, meaning if I'm flat, I would want to buy it at higher levels and then ride the momentum. But I'd want to see it break through a little bit more before I was totally convinced if I were flat right now.
So you're buying on strength in silver. That's interesting.
Yeah, I think we need to. I think it needs to just prove that it's going to break out, because if you look, we've been in quite the channel for, almost about 8 or 9 months now. So I'd want to see a little bit more strength to break out first.
Maybe you're like one of these option prints I'm looking at right now, listeners, as a cheap little nibble. Let's get out there to some of the silver options out here. Like we said, 42%. Going up in the June contract, silver vol right now, 30 1/3 in the June contracts. Obviously, a little bit juicier than gold, which is the way it's supposed to work, up about exactly a point this week. Skew-wise, last week the calls were pretty bid, 6.1% bid. Almost all of that is gone. 5 points off the top. It is now 1.1% bid. So I guess this little rally we had, not that little, 3%, taken a lot of the shine off the top. The puts last week, 3.3% discounted. This week, 1.1% discounted. So we are back to kind of flat in this skew, which again is showing us that, at least for right now, at least in the June contract, not a lot of direction or bias being priced in. Now, if we go beyond that, interesting, the August calls were about 10.5% bid last week. That's mostly gone. So it seems like a lot of this bid, 11.6% bid were the October calls. That's mostly gone. That's been cut in half. So a lot of this bid to the upside has been trimmed quite a bit, which is kind of interesting. Again, that's what we normally expect when we move to the upside, that call wing should come in. So interesting stuff out here. But Mr. Uncle Mike, what caught my eye, what might intrigue our listener here, Mr. Nichols, was maybe looking to nibble. The big dog out here this week, Mr. Uncle Mike, the June 35s going up about 3,000 times this week. So not quite 10%, about 8% of the volume out here going up this week in these June 35s. Have about 33 days to go. Trading about 700 to 800 contracts seems like pretty much every day, mostly opening. Another 700 going up today against an OI of about 2,000. So folks are piling in, it seems like, to these June 35. So we went digging to see what they're trading for, Uncle Mike. And they are a fairly low 82 cents, Mr. Uncle Mike. So an average price of 82 cents for these are June 35s. You get about a month to go. Would that qualify as a little bit of your nibbling to the upside, Mr. Uncle Mike?
It would actually. I wouldn't be against that. What I would probably do is want to spread it off in some way, maybe buy the 35s and sell something against it, and then kick myself when it goes through my short strike on the call spread. That's probably how I would look at it.
So there you go, folks. Some folks are nibbling out there on these June 35s. And if you are one of the many people who are maybe looking at, maybe you want to take a little bit of a low risk swing for some upside here, you can buy those. You can obviously sell more against it. Looks like the 36s are trading for about 54 cents. I'm not sure if you like doing a tight 1 point vertical, Mr. Uncle Mike, but you could get that on for looks like about 28 cents, or is that too tight for you?
Yeah, that would probably be a little bit too tight for me. If I'm gonna buy premium in silver, I want to have a little bit more in between my strikes.
There you go, listeners. Or listeners, you can buy the 33 halves for $1.36, and then do the 35s or even the 36s for 54 cents. So now you're talking about 80 cents for the 33 halves, 36 vertical. There you go, getting a little bit more close to the at the money. A lot of different ways you can carve up that onion if you're looking to nibble at a little bit of upside. Who was that? Yeah, Nichols in our chat was looking to maybe, does that float your boat, Mr. Nichols? Intriguing stuff. But we got to keep on rolling. Uncle Mike, where should we go next? Should we get on the boat, or should we head to the tsunami that's sinking the boat that is equities?
Let's get on the boat first before it sinks.
All right, then. To the rates we go.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, listeners, pop out of that drop down from the metals. We're going to go up one slot to interest rates. Then we'll go product family U.S. rates. And you know where Uncle Mike likes to hang out. He likes to get on the boat with the 10-year. Now, I noticed really quickly here in our chat, Mr. Nichols says he likes those calls. He likes those June 35s for about, 82 cents? Yeah, 82 cents. So interesting. Not a bad nibble if you are inclined for a little bit of upside, or of course you can spread it off against something else. A lot of ways to go about it if you are looking for a little bit of upside, or if you're not into silver, hey, just disregard all of that as we head on into the land of the rates. Mr. Uncle Mike, you're on the boat, you're off the boat is sinking, the boat is on fire. What's going on the boat this week, sir?
There's a lot going on the boat. I think it's interesting that I think one thing to mention about the 10-year note in particular is that when you're looking at volatility in options, whether it's calls or puts, or whether it's the 10-year note or anything for that matter, understand that volatility is priced in not just based on historical movement. So like something like natural gas, like what we were talking about earlier, that's always going to have high volatility. It's just that's just the nature of the beast because it trades all over the place. That's just what it does. But 10-year note volatility, or a lot of other things. So like, let's say the 10-year note isn't necessarily going to have the same movement as natural gas, but it could. Does it mean it will? Probably not, but it could. And so what I mean by that is right now, a lot of volatility, and I'm not the whole entire world market of the 10-year note by any means, but I got to believe that a lot of the volatility that is being priced into 10-year note options has to do with the headline risk, not necessarily the historical movement, but the headline risk. So before we dive too much into the 10-year note options and the 10-year note in general, understand that headline risk is a big part of volatility being factored in as we do it. And I believe that 10-year note volatility is something to definitely be respectful of the potential movement of it. So if you look at the rates of the 10-year note on April 1st, the day before the tariffs, 4.17. On April 2nd, the day of the tariffs, or Liberation Day, I should say, 4.2%. But then right thereafter, rates went down. The third, on Thursday, it went down to 4.01%, but we did not close below 4%. So 4% kind of acted like a bottom, if you will, in terms of the rates itself. Now, when saying this, just always have the understanding that the rates have an inverse relationship to that of the note pricing in and of itself. So when the 10-year note got to 4.01%, sellers came in to the 10-year note itself. We actually got as high of rates, just looking at April 11th, we almost hit 4.5%. We're at 4.48, and these are, I'm looking at closing prices for the rates on the U.S. government websites. But right now, we're at 4.4% yield on the 10-year note. So we've definitely had some sellers coming into the 10-year note in that we're not using this as a flight to safety like a lot of people may think that we would, but there's just a lot of uncertainty happening right now because how are the tariffs going to affect interest rates? Is Trump trying to force Powell's hand with doing what he's doing with the tariffs because he wants Powell to lower interest rates? Trump has said multiple times or many times that he is a lower interest rate kind of guy, and so he'll do whatever he can to make lower interest rates. Who knows? But the point is that if you look at the rates from April 1st before, or even April 2nd before the Liberation Day announcements happened, 4.2% yield. Today, or as of yesterday, 4.4% yield. Now we are getting some buyers today, so the yields probably will be lower tomorrow when they come out tomorrow. But that's where we are right now. And there's a whole lot of uncertainty happening in this 10-year note. The boat needs to take some direction.
Boat, is it sinking? Is it floating? Is it on fire? Are the winds about to capsize it, listeners? All sorts of madness out there. You know, decent paper out here, 3 million contracts. That's nothing to sneeze at, but we have seen the 10-year note put up more paper out there. So it's kind of interesting on the options front that it isn't the most explosive week, but it's certainly respectable. I mean, you can't pshaw at 3 million contracts and anything. I mean, the 111 half calls going out in a day. We're back to 0-day fun in the 10-year now, listeners. They put up 133,000 contracts already. So you're pretty much talking about 3x what we just talked about in silver, just in one call in the 10-year, and it's expiring tomorrow. So that shows you how much paper is going up out here. We could spend hours parsing the 111s that went up. These are the June 111s expiring in 29 days. They went up 126,000 times this week. Or maybe you prefer the 111 and 3/4 calls going away in 6 days. They traded 51,000 times. I mean, we got prints for days. How about 110 half puts expiring tomorrow? 113,000 of those bad boys as well. By the way, the 111 halves and the 110 halves expiring tomorrow seems like the lion's share of the paper on both of those strikes was closing. So folks getting the heck out of Dodge as the week has progressed. But you know what? The show is progressing. I want to make sure we have some time to talk Uncle Mike's other favorite product category, the equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, and for our final product complex, we're going out to equities. We're going to pop out of rates. We're going to go up 2 more slots to equity indexes. Then in product family, U.S. Index E-mini And then from there, it's an embarrassment of riches. We can go the E-mini, we can go E-mini NASDAQ, we can go Russell 2000. I mean, whatever floats Uncle Mike's boat. Mr. Uncle Mike, what is catching your eye in the wild and whipsawy, except for this week, really, world of equities?
I mean, let's go with the S&P mini. Well, why not? Yeah, let's just do that. Does anything else even exist?
I thought you were all rut all the time these days, sir.
I actually was all rut all the time about 16, 17 years ago, but no longer.
I will say, interesting data point before you get into your analysis of the S&P E-mini. I said the 10-year note doing respectable numbers, but not lighting the world on fire, a little bit shy of 3 million. The E-mini over 3 million, 3.1 million. So as of right now, Uncle Mike, the E-mini trumping the 10-year note from a volume perspective. What say you, sir?
That is crazy. That is nuts. But yeah, and looking at the S&P mini, I think that with where we are right now, 5,500 seems to be a key number on the cash index. And so we have, just in looking at all the craziness that's happened over the course of the last few weeks since the tariff announcements, and it seems crazy to me too, Mark. It's only been 3 weeks. It seems like the tariff announcements were like 4 or 5 months ago.
We've all lived 7 lifetimes in those 3 weeks.
That's what it feels like. I mean, this is just insanity. But yeah, so I think that we're getting back to the 5,500 levels. That seems to be kind of like a new magnet for the market, if you will, because looking at it, we were at the close on the cash close on April 2nd. S&P 500, the cash was at 5670, and had the big down day the next day, and then he had a couple of more crazy days to the downside, and then they said they're doing away with some tariffs, this, that, or the other, and we've just kind of been channeling ever since, but it looks like we're going more on the upside. So today it's interesting because if we can close at the levels with which we are at today, then we'll be ahead of where we were on April 3rd, the day after the tariffs. So it'll be interesting to see, because if we would have to go up another 180 points or so in the S&P, which we're up 105 on the day. If we go up another 180, we'll be back to where we were pre-tariff announcement. So I think that that's just really what's driving this market right now. And 5,500 is going to be the magnet number, if you will, from where we are, because we did reach we're at levels to where we were on April 9th. I remember talking with a client in the morning on April 9th, and they announced they had the big tariff announcement, and then the markets moved as crazy as they did, and Trump had people in the White House saying, oh, you just made $2 billion today. You made $1 billion today. And we'll see where we are. But for right now, it's volatile, but it's kind of interesting to see and think that we're about at levels to where we closed on April 9th. So that's what I'm seeing right now.
All right, listeners, like I said, we are seeing a whole boatload of paper out here in the E-mini this week, which again, reflecting that equities very much in the crosshairs for most people out there. 3.1 million contracts. Spoiler alert, we're not going to parse all of that or even most of that. Listen, it's a boatload, especially when you consider that 17.5% of that is going out in a few minutes. And if you add in tomorrow's paper to the mix, that's another about 15%. So you're talking about almost a third of all that paper expires in the next 24 hours out here, listeners. So wild stuff. I'm looking for some of the more exotic prints. And once again, you got to filter past the noise, like the 4,500 puts going up for 63,000 contracts this week, or the 44 quarter puts that traded 20,000 times this week, only on Tuesday, all opening. So someone blasting away at the 44 quarter puts in the S&P 20,000 times. So a lot of that noise kind of gumming up the works. But if you get to some more salient, looks like 5,500, I was talking about this on the option block this week, is obviously a seminal strike. We were kind of racing towards it, then retreating away from it. We're getting closer to it again as we're coming into the end of the show. The S&P up about 105 handles, up nearly 2%. So within spitting distance of 5,500. Let me just look really quickly to see. I don't think we Did we broach it earlier today? No, we got up to about 54.80, it looks like, and that's kind of where we're hanging out right now. So if this head of steam can continue, these 5500s might indeed come into play, and it seems like, no surprise, that has been an active contract, nearly 12,000 going up today. OI only about 1,000, so clearly a lot of opening paper out here. I'm just trying to look for you, listen, to see if I can get any interesting sense for prices on these bad boys here. I think they've probably been trading all over the place. As we get closer to that strike, as the day is winding down, obviously some interesting stuff, including some a little bit longer term stuff. They got a June 6,200, 64 half vertical going up today for about 3 3/4. Pretty far out of the money, and it's only till June. 6,200, that would be probably a end of the trade war type of deal where we're making new all-time highs again. Or maybe, again, a lot of paper here today, a lot of it is June-centric as well. 5,700s, that's another interesting strike, trading a decent amount today, about 1,600 of those for about $75. It's a meaty contract out there as well, listeners. So kind of stuff all over the place. I'm just trying to sort for some interesting size. How about going all the way out to September? A little bit more upside, none more verticals. The SEP 6,000, 6,500 vertical, trading a decent amount today for about $64. So again, we have a lot of upside bias paper, not all of it. You also got the June 3,500, 2,800 put spread, so a whopping 700 handle put spread for $3.59. Good to see that they're protecting themselves to the downside. In case, I'm assuming they're selling that for $3.59, in which case they're protecting themselves at the 2,800 strike in case the worst happens and the bottom falls out of this market. By the way, the June par puts, 5,000 puts, if you're wondering what those are, trading for about $71.35 today. So interesting stuff kind of all over the place out here, which again, you would expect when there's about 3 million contracts on the tape, but still interesting nuggets. You can probably pick your poison for just about every viewpoint out there today. You like some puts, they're lighting it up. You like some calls or some verticals, they're lighting it up. Some funky flies, you name it. 3.1 million contracts on the tape in the E-mini, listeners. A very active week. All right, listeners, we've almost exhausted Uncle Mike. He's been talking on 2 shows now, so we got to let him get back to the client business that he's supposed to be doing on days like today. But before we do that, listeners, let's follow up on a couple of the flash polls we put out there on the option block earlier today. Just check in and see. We're having some fun out there, listeners. First off, Uncle Mike, nobody can make up their minds anymore on the Palantir NVIDIA battle. They're both trading 106. The poll is now exactly 50-50, not 50.01 to 49.99. Exactly 50% each. Uncle Mike's, our audience literally cannot make up their mind at all. And then those Funko calls, 45.5% of our audience wants to buy them. 36.4% wants to sell them. 18.2% not interested in any fun at all. And just for fun, we added the Flowmaster's Mexican concrete name. The May 6 calls for 15 cents. 5,000 of those traded, and about 60% of you want to buy them. So interesting stuff. Uncle Mike, what are your thoughts on those and the fact that our audience can't literally make up their minds? A lot of people voting hot and heavy, and yet they can't make up their minds. Palantir versus NVIDIA. Sir.
I mean, I have a hard time making up my mind on that one as well, to be honest. I went with NVIDIA, but not by much, so that's kind of interesting to see.
And if folks want to talk to you about all this interesting stuff, metals, silver, 10-year note, equities, or more, where should they go? What should they do?
Check out my website, stcharleswealth.com. Would love to make an appointment with any of my listeners from any show on this network. Always enjoy talking to option blockers.
Option
or
blockers?
Futures blockers, or any show on the network. Options insiders, anyway. I'm tired, folks. I've been talking for 2 hours.
Yeah, he's not used to doing my dance, listeners, doing 2 shows back to back. It's a lot for Uncle Mike. We need to let the big man rest. So check him out over there. stcharleswealth.com, the place to go to learn more. Of course, you know where to go. Check out these reports and everything else. CMEgroup.com/TWIFO, the place to go to kick the tires and light the fires. That's going to do it for us on a back-to-back doubleheader day on the network. Back again tomorrow, noon Central, with Dr. Vix to talk all things vol. Who's going to join us on the show tomorrow? Got to tune in to find out. And then after that, we come back one final time exclusively for all you cool cats and kittens hanging out in the secret club to talk some options. Oddly, I see some people were talking about the draft. Yeah, it's draft day today, so hopefully your team, whatever you root for, has a good day out there. Or if you don't care, then just let it sail on by. But intriguing stuff. Don't let the oddities sail by, though. Head on over to the Pro, theoptionsinsider.com/pro. It's the only place to get your hands and your ear holes on some cool options oddities. Again, you want to check out that Pro Q&A with Dan Gramzo this week. That was a banger, if I do say so myself. Check it out on the Pro. Then we're back again next week, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.